In this video, we look at how do you invest in gold and silver. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. Now that is out of the way, let's continue with our video. Gold and silver have been prized throughout human history for their rarity and beauty. But beyond their aesthetic value, these precious metals have also been recognized as stores of wealth and protection against economic instability. In recent times, with global economies often fluctuating, many investors have turned to gold and silver to hedge against inflation, currency devaluation, and geopolitical uncertainties. In fact, as of 2020, central banks around the world collectively held over 35,000 metric tons of gold. What's even more surprising is that historically, gold has outperformed the stock market during times of extreme volatility. This remarkable data alone makes investing in precious metals worth considering. When considering gold and silver investments, one must first decide on the form in which to invest. The options are vast. Some prefer physical ownership of gold and silver in the form of coins or bullion. Others invest in financial instruments like ETFs, exchange-traded funds, or mining stocks. Each method has its own unique advantages and disadvantages, and the right choice will depend on an individual's goals, risk tolerance, and investment horizon. One of the most direct ways to invest in gold and silver is by purchasing physical bullion. This can be done by buying coins or bars from authorized dealers. Popular coins include the American Gold Eagle, Canadian Maple Leaf, and South African Krugerrand. Holding physical gold or silver can provide a tangible sense of security that no financial instrument can offer. Investors have the peace of mind knowing that their wealth is stored in a physical object that has retained value for centuries. Furthermore, physical gold and silver are not tied to the whims of a financial system or government. In the event of an economic collapse or financial crisis, bullion may provide protection against total loss of wealth. However, storing physical gold and silver presents its own challenges. Security is a primary concern. Storing large quantities of precious metals at home exposes investors to theft. While banks and private companies offer vault storage services, these come with fees that can eat into profits over time. Additionally, selling physical bullion can sometimes be less convenient than liquidating financial assets. Precious metals dealers often buy at a price slightly below the spot price, meaning that investors may not immediately recover the full value of their metals when selling. An alternative to holding physical metals is investing in gold and silver ETFs. These funds track the price of the underlying asset, allowing investors to profit from price movements without needing to store the metal themselves. Gold ETFs, like the SPDR Gold Shares, GLD, are particularly popular because they offer a way to gain exposure to gold without the need for physical storage. Silver ETFs, like iShares Silver Trust, SLV, operate in much the same way. ETFs are easy to trade, liquid, and can be bought through most brokerage accounts, making them accessible to a wide range of investors. Additionally, since ETFs are a financial instrument, they do not have the storage and security concerns associated with physical ownership. However, there are downsides to investing in ETFs. When investing in gold or silver ETFs, investors do not own the physical metal itself. They own a share in a fund that tracks the metal's price. This distinction is crucial because, in times of crisis, the paper claim represented by an ETF may not provide the same protection as owning physical bullion. Additionally, there are fees associated with managing ETFs, which can erode returns over time. While these fees are typically lower than the costs of physical storage, they are nonetheless something to consider. Another method of gaining exposure to gold and silver is through mining stocks. By investing in companies that mine these metals, investors can potentially profit from both the price of the metal and the success of the mining operations. Mining stocks can be more volatile than the metals themselves because their value is influenced not only by the price of gold or silver, but also by the management, production efficiency, and overall profitability of the mining company. Companies like Barrick Gold and Newmont Corporation are among the most well-known gold mining stocks. Silver mining companies like Pan American Silver offer similar opportunities for silver investors. In times of rising metal prices, mining stocks can provide outsized gains relative to physical bullion or ETFs. However, the volatility of mining stocks also presents risks. If the price of gold or silver falls, mining stocks tend to decline even further. Moreover, individual mining companies can face operational risks, such as labor strikes, environmental regulations, or production shortfalls, which can negatively impact their stock prices, even if the price of gold or silver remains stable. For this reason, investing in mining stocks is often seen as more speculative and may not be suitable for conservative investors seeking stability. For those seeking a balance between physical metals and the stock market, royalty and streaming companies offer another alternative. These companies finance mining operations in exchange for a portion of the metal produced or the revenue from it. Franco-Nevada Corporation and Wheaton Precious Metals are two examples of companies that use this business model. Royalty and streaming companies often benefit from rising gold and silver prices without being directly exposed to the risks faced by mining companies. However, they are still susceptible to price fluctuations in the metals market, and like any investment, come with risks. Diversification is a common strategy when investing in gold and silver. Rather than focusing on one form of investment, many investors choose to spread their capital across physical bullion, ETFs, mining stocks, and royalty companies. This approach helps reduce risk by not being overly reliant on any single method of exposure to the metals market. For instance, during a bull market for gold, physical bullion and ETFs may rise steadily in value, while mining stocks could experience more rapid gains. Conversely, during downturns, physical bullion might hold its value better than mining stocks. Investing in gold and silver also provides diversification benefits at the portfolio level. Precious metals tend to move inversely to stocks and bonds, making them an effective hedge against market volatility. During periods of inflation or economic uncertainty, gold and silver typically rise in value as investors seek safer assets. This characteristic makes them particularly attractive during times of rising inflation, when traditional financial assets like stocks and bonds can lose value. One of the main disadvantages of investing in gold and silver is that these metals do not produce any income. Unlike stocks that pay dividends or bonds that offer interest payments, gold and silver simply sit in a vault or ETF account. Investors who prioritize cash flow may find it frustrating to hold assets that do not generate income. Furthermore, the price of gold and silver can be volatile in the short term. Prices often fluctuate based on economic data, geopolitical events, and investor sentiment. This volatility can be unnerving for investors who are not accustomed to such swings in value. Another important consideration is the tax treatment of gold and silver investments. In many countries, gains from the sale of precious metals are subject to capital gains taxes. In the US, for example, physical gold and silver are classified as collectibles and are taxed at a higher rate than most other investments. Investors should consult with tax professionals to understand how their investments in precious metals will be taxed. Despite these challenges, gold and silver have proven their value as long-term stores of wealth. Investors who are willing to accept the short-term volatility and lack of income generation often find that these metals provide critical protection during periods of financial crisis and inflation. Gold and silver are not just commodities, they are hedges against the unpredictable nature of global economies and the devaluation of paper currencies. Investing in gold and silver requires careful consideration of one's financial goals, risk tolerance, and time horizon. Whether through physical bullion, ETFs, mining stocks, or other methods, these precious metals offer a way to protect wealth and diversify portfolios. However, like any investment, they come with risks that must be understood and managed.